video did not work, so we're gonna try to do this a different way. But this is a question I get all the time is what do I do? I want to take control of my finances, but I don't like dealing with them. I don't want to do a ton of work. I'm growing my company, especially when you're in that 1 to 5 million range in revenue, you're looking at bigger numbers. And up until now, you've just been so busy hustling and working hard to get your revenue up that it can be really confusing when you're looking at your profit loss statement and saying, well, and your bank account balance is fluctuating. And you thought certainly by now, being a 7-figure business, all of my financial problems would be solved. But the reality is that there's just more zeros attached to it. So what I'm going to do today is show you in just a few very simple steps how you can get clarity around your cash flow, and then give you one easy action item to start improving your profit and have more money in the bank. So who doesn't want more of that, right? Okay, so here's what you're going to do first. I want you to get your income statement or your profit loss statement, and I want you to run a report so that you have the last 12 months in that profit loss. If you have the option to make it cash or accrual basis, make it cash basis. And if you need to go back and watch this again later and just pause it, you can do that and you can go step by step. So cash basis, last 12 months. And what you're going to do with that report is you're going to look at your total revenue. So write down what that total income or total revenue was. Income statement, P&L, same exact report. So when you have your revenue, then you're going to want to calculate using the profit first method. I'm going to kind of walk you through how to do an assessment using profit first. And so we want to identify what is our real revenue. Now, this is not an accounting term, okay? You're not going to find this anywhere on your financial statements, but real revenue is simply once we subtract out any contract work or labor or materials that are directly required to create that actual product or fulfill the actual service. We subtract that out, that gives us our real revenue. So I'm going to give you an example. Let's say that you are a t-shirt company and your revenue is $4 million in the last 12 months. Okay, great. So we're going to then subtract the t-shirts themselves, and let's say that you make custom silkscreen t-shirts. So then also the cost of ink. So it's t-shirts plus the ink. It's not the supplies you use. It's not the packaging or anything like that. It's just the t-shirts and the ink. So take that top line revenue, subtract the cost of t-shirts and ink, and that's going to give you your real revenue. Now, from your real revenue, we're going to be identifying percentages. So just set that real revenue number off to the side. And now we're going to add up using our profit loss and another document. We're going to figure out how much money in the last 12 months has gone to pay the owner, you, cover business expenses other than what we've just calculated out, but all other business expenses, taxes, and then is there anything left over after that for profit? And so the way that you're going to do this is you're going to look at that profit loss statement, and any other expenses you're going to just add up. So when you're looking at other cost of goods sold, if you have other cost of goods sold besides your materials expense or that subcontracted labor, then you're going to add those. You're also going to add up all other, general expenses. Now you can do a shortcut by looking at the total expense line, but I want you to just subtract the amount for owner pay as well as any taxes or depreciation. Because depreciation, that's not really money that's coming out of your account, and owner pay, that's going to be a separate category. Taxes, it's going to be a separate category. So that's why we subtract that out. Once you have your expenses added up, you're going to move on to, I almost missed something really important. Look at your balance sheet next. So once you have all your expenses added up from your profit loss statement, go look at your balance sheet. Okay, also run this as cash basis for the same, time period. And on your balance sheet, you're going to notice other cash outflows that are not going to be on your profit loss. And I'm not going to get into the accounting mumbo jumbo about why that is, just that's how it is. So you're gonna look at how much you've paid for credit cards. So what are the minimum payments that you're paying on credit cards? You could also look at a bank statement if the balance sheet is confusing or you don't want to use that. You could also look at your bank statement. So look at credit card payments, look at any other kind of debt payments that you're making. Maybe it's a vehicle payment, or maybe you have an SBA loan, anything along those lines. Maybe it's a short-term one of those Stripe or PayPal loans. How much are you paying back towards that? Then look at your, so when you add up those together from the balance sheet, combine that with what you added on your profit loss. Those are your total expenses. Those are your real expenses, because that's how much money you're spending to operate the business and to keep up with debt payments. Okay. Next, we're going to add up our owner's compensation. Now, if your company is between 1 and 5 million, I really hope you are that you're an S corporation and not, being taxed as a sole proprietor. So let me know if you have questions about that. But assuming you're an S corp, you're going to get paid in both wages and distributions. So using your profit loss statement, those wages are going to be owner wages are going to be on your profit loss. So go ahead and use that number and then add it to any distributions or owner draws. Same thing, distributions, owner draws that you've taken, and that number you'll see on your balance sheet. So when you add the total of that up, that is your total owner's compensation. Next, we have taxes. So anything that you have intentionally paid in taxes, quarterly estimates, any other taxes that you subtracted out of expenses from your P&L, then that would be all stuff that you would want to add into your taxes. What you don't want to add into the tax category here is, you took a distribution and then when tax time came, you realized, oh shoot, I got to pay taxes on it. So then you covered the taxes from your own personal bank account. Don't count any of that. Just count what you intentionally paid toward taxes in the last 12 months. And then the last category is profit. It's the most important, but it's the last one that we're adding up. And all you're going to do is you're going to take that real revenue number that you came up with a few minutes ago, and you're going to subtract all of the other categories. So you're going to subtract your total for expenses, owner pay, and taxes. And what do you come up with? Do you come up with a positive number or a negative number? If it's a positive number, you get to write that in as profit because that's money that you actually kept in your business that you didn't spend. And if it's a negative number or if it's zero, you can just put zero. If it's negative, that means that either you were using retained earnings from last year to fund some things, or you were using credit cards and other debt sources, and there's not really real retained earnings that you have kept in the business in the last 12 months. So that's all that means. Now that we have our numbers, so this is going to be our last step, is we're going to calculate these categories as a percentage of real revenue. So if you take your owner pay, and let's say that your owner pay last year was $150,000, then total between your wages and your distributions, let's say it was 150 and our real revenue is $3 million in our example, then that is 5%. Okay, so do that same thing for the other categories for expenses, taxes, and for profit. Now what we want to do is we want to compare that to a standard of healthy percentages, healthy targets. You can kind of think of this like financial KPIs, but they're really not the same thing. This is, I think, a lot more just user friendly to get an instant assessment of what's going on in your business. So You can Google this chart, profit first percentages. You just Google it and it'll pop right up there on images. You'll see a bunch of tables. They're all the same. And if you're in that 1 to 5 million range, then when you're looking at real revenue, you want to these are some healthy targets to shoot for. 10% profit, 10% owner compensation, 15% taxes, and 65% operating expenses. So when we're looking at these, compare how close you are to these percentages. Now, I'm not saying that you have to just cut and paste that these are the exact percentages you should go for. But if you're struggling with your cash flow or you don't really know where your money is going or where it should be going to, this is an excellent starting point. It'll give you a really good estimate of where there's opportunity for improvement. So if your profit is at 0 or at 2, 3, 4, 5%, then hey, guess what? We can get to healthier margins and really increase the amount that you're able to save and then use for other purposes. If your owner pay is too low or perhaps it's too high, that can happen too, or we take really big draws because we didn't anticipate enough for taxes, right? That can also happen. So start to think about what is the story that these numbers are telling me. And then that's going to give you just the overall big picture of where the money is going and some ideas of how to set some goals and what to focus on first. But one quick actionable tip is just go open a separate bank account today. Open a separate savings or checking account with your bank and start putting 1% of revenue into that account. So every month, look at how much revenue has come in and start putting 1% away. That's going to get you started with saving money, with setting that profit aside so that it doesn't accidentally get used for other things. And if you can get into that habit over the next month or two, or maybe the first quarter, then start to look at other opportunities like, how could I make that profit 2 or 3% this quarter? And you start finding those small but meaningful changes in your business that are going to make a big difference. And then eventually you can get to the point where you're really hitting those targets and optimizing where your money is going. And when you have money in the profit account, when you know how much you need to have set aside for operating expenses, you know that your overhead isn't too high, when you have a consistent amount that you can pay yourself and you know that what you're paying yourself is in proportion to your revenue, and when you're setting aside money for taxes intentionally, you're going to have your cash flow really well figured out. As always, let me know what questions I can answer for you. If this is something that you'd like help with, this is where I like to start when it comes to getting control of your cash flow and doing that financial analysis. So just reach out. You can send me a DM and I'd love to help. Have a great day, you guys.